As of July 21, 2026, during live trading on the NASDAQ exchange, NVIDIA stock is trading at $204.78 per share, marking an intraday upward movement of $1.50 or roughly 0.74%. The prices ranged between an intraday low of $204.01 and a high of $208.65, accompanied by an active trading volume exceeding 18 million shares. While everyday retail traders using popular self-investing options like a Robinhood app, SoFi Active Investing, or a basic individual brokerage account see this moderate green tick as just another standard trading day, a massive structural shift is taking place right under the surface. Standard market sentiment suggests that NVIDIA is simply consolidating after reaching massive heights in recent years, but the reality is far more complex and tactical. Big institutional money navigating through high-end interactive brokers platform tools and Fidelity wealth management portfolios is not looking at daily tick-by-tick swings. They are quietly repositioning around NVIDIA's hardware-software lock-in ecosystem that rivals the multi-trillion-dollar moat long enjoyed by Apple stock. To grasp the full picture of NVIDIA stock, you have to look at the sharp tension between public perception and actual institutional execution. The retail consensus on popular investing sites and retail apps like SoFi Invest or standard investment help forums is that semiconductor stocks have reached a temporary peak due to soaring valuation multiples and macro interest rate worries. People ask whether the massive surge in chip demand is sustainable or if tech spending is about to dry up. That is the expectation. The reality, however, shows that computing capacity demand is expanding into new industries like custom sovereign enterprise networks, industrial robotics, and drug discovery platforms. While retail traders worry about quarterly cyclicality, institutional managers using Fidelity mutual funds, Schwab intelligent portfolios, and interactive brokers account setups are quietly adding exposure during these intraday dips. Retail sees a sideways trading range. Smart capital sees a prime accumulation phase. Looking directly at the immediate trading action over recent sessions, NVIDIA stock trading volume and volatility present a clear story of institutional tug-of-war. After dipping down toward the 195 level earlier in the month, buyers aggressively stepped in to defend support, pushing the equity back above the critical $200 mark. Daily swings have been pronounced, with intraday spreads reaching over $4 as macroeconomic headlines clash with persistent enterprise buying pressure. Major market platforms including Robinhood stock trading and Fidelity brokerage desks have registered consistent net inflows into semiconductor funds, with NVIDIA remaining the primary recipient of active trading volume. This price momentum reflects a broader market sentiment where technology equities are acting as primary liquidity hubs for investors seeking inflation hedges and long-term capital growth. When analyzing institutional ownership, the data reveals that major funds managing online investment options through platforms like Fidelity Trading Platform and Interactive Brokers Stock Trading are not scaling back their long-term positions. Instead, they are using automated rebalancing algorithms, similar to those deployed in intelligent portfolio architectures, to maintain target weightings while harvesting short-term volatility. Options market data shows strong open interest around call options, signaling that institutional money is positioning for upside catalysts in upcoming reporting cycles. Sector momentum across the broader chip landscape has remained elevated, but NVIDIA stock continues to capture a lion's share of the profit margins within the entire hardware stack. Comment below how many shares of NVIDIA stock you currently hold in your portfolio and whether you are buying more or holding steady right now. To understand why this momentum continues, it helps to review the foundation of the business model. Historically known for manufacturing high-end graphics processing units for video gaming and visual rendering, the company underwent a major strategic shift years ago by committing heavily to parallel computing architectures through its proprietary CUDA platform. This software framework transformed standard hardware components into specialized computation engines capable of handling massively complex algorithms simultaneously. Today, the core revenue engine is anchored by its data center division, which provides accelerated computing hardware, high-speed networking fabrics, and enterprise software suites to major cloud service providers, government entities, and large global enterprises. Past financial performance highlights the scale of this operational expansion. Over previous fiscal reporting periods, top-line revenue scaled exponentially, transitioning the enterprise from a secondary hardware supplier into one of the most valuable corporations on global exchanges. Operating margins expanded significantly alongside revenue growth, driven by pricing power over its advanced chip architectures and integrated networking solutions. Balance sheet fundamentals remain exceptional, characterized by low leverage, high current liquidity ratios, and substantial cash reserves that allow continuous internal investment in next-generation research and development. This solid balance sheet foundation gives conservative long-term wealth advisors using Fidelity IRAs or automated intelligent portfolio platforms confidence in holding the stock through broader market volatility. Looking toward the future, the outlook for NVIDIA stock relies heavily on several key catalysts, risks, and emerging opportunities. The main bullish catalyst is the continued rollout and enterprise deployment of next-generation chip architectures, which offer drastically reduced power consumption alongside exponential leaps in processing efficiency. As data centers face physical energy constraints worldwide, hardware efficiency becomes the ultimate competitive advantage. Furthermore, the expansion of sovereign technology initiatives, where global governments build localized computing infrastructure, creates an entire secondary customer base beyond private enterprise cloud giants. However, realistic analysis requires weighing clear operational and macroeconomic risks. Regulatory trade restrictions, supply chain bottlenecks in advanced packaging facilities, and potential geopolitical tensions represent genuine operational friction. If supply constraints limit unit shipments, or if enterprise capital expenditure spending slows down due to broader macroeconomic pressures, short-term earnings expectations could face downward adjustments. Additionally, high market expectations mean that even minor top-line or margin misses can trigger sudden, sharp pullbacks in share price as fast money traders exit positions on popular retail online investing apps like Robinhood Cash Management or SoFi Active Investing accounts. When balancing expectation against reality, the long-term investment case stays grounded in structural demand. The initial market narrative assumed that accelerated computing hardware was a temporary build-out trend confined strictly to major hyperscale cloud providers. The reality is that parallel computing is replacing legacy central processing units across every layer of global digital infrastructure. Whether investors manage their capital through a dedicated Fidelity Wealth Management advisor, a flexible interactive broker's account, or a self-directed Robinhood fraction shares plan, understanding this structural transition is essential. In summary, today's live stock movement at $204.78 reflects a market quietly consolidating while institutional players position themselves for long-term growth. While retail sentiment frequently swings between short-term hype and sudden valuation fear, the fundamental reality rests on cash flow generation, software lock-in, and expanding structural demand across global enterprise markets. The gap between what the market expects and what the underlying business delivers remains the single most important metric for any investor following NVIDIA stock across any online investing platform today.